Hi, and welcome to this episode of Regularly Disruptive. I'm excited to have on with us today is Connie Bowen. I've known Connie for some years. She's a great ecosystem leader doing some really exciting stuff. She's currently leading Farmhand Ventures. And I'm just going to go ahead and go straight to Connie. Connie, tell me about the problem that Farmhand Ventures is solving and the impact you're having.
Yeah, for sure. Thanks for having me. It's always good to chat, Dan. Yeah, I started Farmhand Ventures ultimately to build a better future of work in agriculture, leveraging my skill sets and networks, which means investing. So at Farmhand, we invest in startup companies that are building a better future of work in agriculture with really a focus on improving the lives of the people who actually do the work. And we've got a problem in ag where we're kind of bleeding talent at every single level. There's a lot of causes for that. And there's also a lot of opportunities, particularly on the technology side, to start to solve some of these problems and make work in agriculture as attractive as work in medicine or law or finance, whatever. And until we do that, we're going to continue to have a lot of big macro problems in our agricultural systems. And it's important that we solve those because we all eat and use fuel and wear clothes. So we kind of need ag.
Nice. Well, that's a great intro. So some people that are following us here may not know, when you say ag is bleeding talent at all these levels, so some people may not know. They're like, well, I guess there's farmers and I guess there's field hands. And then what else is there?
Yeah.
Like, can you talk a little bit about why this problem is, covers some territory that people may not be familiar with?
Yeah, absolutely. And, I'll try to still keep it relatively tight. I think and if anyone wants the 3-week lecture version, you can follow up with me. But we've got, and I should say too, Farmhand is based in St. Louis. I'm based in St. Louis. We do a ton of work in California. We focus really on the US though, or on companies that are focused on the US market. And we focus really on very early stage companies as well. But what I've noticed over the past decade or so working in ag, and my family has a farm in Iowa as well, so I've had some kind of familial experience within the space. Farmers are aging out. So this is true across the board in the United States. I'm not going to give you the average age off. I think it's 56 or something, 57 right now, of the American farmer, but it's quite close to retirement age. Farmers are squeezed in every single way, right? It's, the tariff stuff that's happening right now is particularly stressful. And then I would say in ag tech over the past, I don't know, maybe even 5 years, like the first half of ag tech being a thing, we really didn't talk that much about farmers, and perhaps as a consequence, we've not seen a correlation necessarily between ag tech venture capital dollars deployed and on-farm technology adoption. Generally, in product design, it's good to include users, so that could have been a problem.
Yeah.
But we've gotten better about including farmers as part of the conversation. But on a farm operation, there are, particularly on a food crop farm operation, or specialty crops, so like fruit, vegetables, nuts, like stuff you eat, as opposed to row crop. I mean, this is true in livestock too, dairy especially. These are really labor-intensive operations. There are about 2.4 million people doing agricultural labor in the United States on kind of the hourly or piecemeal wage rate. And those folks almost never come up in ag tech rooms. That population is also aging out. There's a bunch of other factors at play. I mean, you make in the US, according to the latest, which I think is 2017, so not that updated, IRS data, farm workers make 60% that which they would make working in the fast food industry indoors. So you've got, just right off the bat, pretty unattractive earning potential. And it's one of the most dangerous jobs. Farm workers die on the job a lot more than in other jobs. Usually that's heat exhaustion. Sometimes it's equipment stuff. Sometimes it's chemical stuff. And, that's, as you can imagine, not the most competitive sales pitch for emerging talent. And I started Farmhand a couple years ago because we exist now for the first time in human history, really, with an opportunity to actually make all of work in agriculture attractive. And we can do that technically through collaborative automation and collaborative robotics and leveraging this next generation of equipment to actually deliver upon some of the promises of precision agriculture that we've been talking about forever that will actually enable farms to be more stable and more sustainable financially. Also more sustainable environmentally, but the financials have to come first, and will enable a safer and more interesting and attractive workplace for people to work within, which gets the flywheel going, right? And then agtech can innovate more rapidly and more efficiently as a consequence of motivated talent working in the industry. So that's
Wow.
a high level view.
That was pretty thorough. I'd hate to see what you do in the really long lecture because that was pretty thorough already. But so just let me, if I could paraphrase, so there's 2.4 million people working in the farm workforce, the actual people
That's
doing
just that's like all manual labor.
Right. That's all the manual labor. Those people are being paid 60% of what they could make working in fast food, which already, by the way, can't staff all of their jobs.
Right.
And it's a dangerous job and people are aging out of it. There's this automation thing. And I like how you talked about
collaborative robotics. Yeah.
Collaborative robotics. Imagine some of us think that, well, I've seen, Tesla's got Optimus. And so Optimus is just going to take all those jobs. So we won't need anybody in the fields. Is that what's the prediction on how many people will still need to actually be out there? So is that a shrinking workforce or we need it, talk a little bit more about those trends.
Well, yeah. And I'm like, there's another 1.2 or so million farmers in the US, like also according to NAS statistics, also aging out. You've also got macroeconomic trends on around birth rates that mean that like there's not. And obviously, also, you've got immigration raids happening, and absolutely we'll be seeing those on farms in this impending season.
So does the 2.4 million, so we're actually at 3.6 because we've got the farmers themselves, the operators of these farms. But so of that 2.4, does that include the people that are undocumented or, like the current?
Yep. We're incredibly reliant, and agriculture throughout history has been reliant upon a workforce that has less than full citizenship rights. And that is an opportunity. And I want to make clear that there are plenty of this is a really complicated issue where farmers, and there are plenty of really good farmers who care a lot about their workforce. And there are also farmers who are exploiting their existing workforce. And we've got the system where in order to keep food cheap, we have to keep labor costs low. And the only option to keep labor costs low for pretty much all of human history has been exploit people. But we're at a point where we can actually change that. And we can say, oh, well, maybe we will have fewer individuals working in fields, but those individuals will be making more money and will be doing so in a safer environment. And they'll be working alongside technology equipment that makes their job and makes their job easier and empowers them to get more done with less, backbreaking labor. And so, go ahead.
No, I'm fascinated because what you're pointing to is one of my next questions was going to be, so what's the thesis of, what's the goal of Farmhand Ventures? So it's a venture fund, like you're raising capital to deploy capital, but you're solving this problem of the only labor right now is exploitive. The only path to cheap labor right now is for managing your labor cost tends to be exploitive in one way or another. So you're trying to bring together these two sides to say, how do we invest in a way to make this be less exploitive and I'm guessing more honest or have more integrity, like with the values that we say that we're standing for?
Yeah, definitely. We're definitely trying to invest in high integrity food systems. And we're trying to do that by investing in high integrity tech companies that actually, and there's a purely capitalistic case to do this, right? Again, when you design products, usually you want to include users or you're not going to design a very good product. And what happens a lot in ag is there's just this huge disconnect between technologists who tend to come from cities and who tend not to have any farm experience. Fewer than 1% of Americans, and that number keeps going down, have any real meaningful exposure to agriculture. And it just means that you've got this real gap. And a farm operation is additionally, it's complex because you tend to have the management level who tends to be English speaking. And then you've got your labor level that tends to be non-English speaking, usually Spanish speaking in this country. And sometimes you've got really, really cohesive functional operations. Oftentimes that's a little less the case. And so the guy who's making the purchasing decision on the management level might not really be even respecting, let alone understanding the folks who are actually using that product. And part of my hypothesis really behind Farmhand Ventures and our thesis is, if you include the folks who do the work in the development of the solutions, one, you're going to capture massive amounts of insight and experience. Two, in my experience, again, I lived and managed farms in Oregon, and it was our first year of a certain crop, and so I was working alongside folks as well as managing folks. In my experience, I've never worked with harder working people, and I've also worked in restaurants, and people work hard there too. But like, farm workers are the types of founders, the gritty kinds of folks I want to be able to invest in and back. And I think they make really valuable early employees and consultants to startup companies. So at Farmhand, we're investing in companies that do automation. So we're investing in a 2-arm strawberry harvesting robotics company, L5 Automation. And yeah, I don't want people to have to pick strawberries outdoors. You can really only do that until you're about like 35, 40 before your back is so wrecked from the task that you can't do it anymore. It's an incredibly expensive task for farms to pay for. And we've been trying to automate it for a really long time, actually. It's a very complex, basically the leaves cover the berries, and that makes it complicated. And so Hive is going after that problem, and they're doing so with investment. One of my co-investors is a large strawberry operation called Good Farms. And Good Farms has a really functional, actually, operation wherein the management and the farm labor level folks are treated equally. And as a consequence, L5 is able to develop with the folks who are actually doing the work in such a way that they're not threatening people. And they're not saying, oftentimes when you talk to tech guys about automating in ag, they say, oh, we're eliminating this many jobs. We're replacing this many people. And it is true that ultimately strawberry picking jobs will be displaced. But L5 is designing that in such a way that the folks who are doing that right now trust Alex and his team and are already applying insights on, okay, here's how this robot, which sucks right now, like most early stage technology, this robot can integrate into our operation and make me move into a position where I'm doing quality control in the field, for example. So there's an opportunity to do this, and they're doing this with farm management all the way through the chain such that you can actually create a pathway towards increased farm profitability while also automating tasks that are drudgery type tasks. And you can create win-win scenarios that actually enable, and most of the farmers that I operate and co-invest with are viewing these technology investments as mechanisms to retain their existing workforce. And
interesting.
Yeah, and I think that people don't realize that because you've just got the labor market is such that there is such a shortage that all of the good operations, really strong, the really financially strong, sound operations are doing whatever they can to retain the best workers, because it also makes a huge difference in who you employ in terms of the efficiency and the output that you get. And in a low margin industry, that really matters. So yeah. That's how we're thinking about it.
So I want to get to, like, I think it's really interesting for other people to be able to learn from what you're doing. So you're a venture fund, but you're looking to engage people in the actual product development. So like, not, you're trying to be smart money, not as in wise people sitting around a boardroom table, but as in people that can say, let's get this out in the field with people that can really show what it's going to do. Yeah. So you're a venture fund though. So does success look, when you start, get up every day, are you thinking that like, well, we're going to make these investments and we're going to have these exits and we're going to return this back to our LPs? Tell me a little bit about how you look at long-term success. What does that look like for you?
Yeah, I just played this. I was just working on kind of our 10 years. What does success look like? To me, investment is about aligning shareholder expectations. And so we have structured a fund model that is actually a blend of equity and redeemable equity, which is kind of a hybrid debt equity product. In agtech over the years, we've had almost one unicorn is how I describe it. The Climate Corp was almost $1 billion. And we're still talking about a 2013 exit. And that's, I would love for there to be a bunch of agtech unicorns tomorrow. But in the event that I'm wrong, I would also like to return my LPs the level of the multiples that I have promised, or at least promised as plausible, because I can't promise, what happens tomorrow. But And so we have structured a fund that we believe will deliver venture multiples. We have incorporate redeemable equity because we feel like it drives and encourages companies to move towards basically fundamentals, so profits. And it lets us get capped upside. So we say, okay, I'll buy 10% of your company for $1 million, and we're going to agree up front that you're going to pay me back 5x over once you hit a certain revenue target. You're going to start those payments. And so it means that generally I'm going to get dollars back in my fund to either distribute to my LPs or recycle faster than I probably would via equity. We've got kind of a liquidity problem in ag right now, and actually kind of weird right now, but especially in ag. And so this kind of solves that. And it's not for everything, right? I like having kind of options for how to invest because different deals should be structured differently. And the one other thing that I think is really core to our approach at Farmhand is like, you've got to have a full stack approach to resourcing your startup company. And so we're also partnered with the University of California Ag and Natural Resources, or statewide extension. We work with them to spin up companies, so kind of as a venture builder type thing, tied to all of the UCs and Applied Extension in Cal States. And we also do field days all around the state where we non-dilutively bring startup companies to growers. And all of this is influenced and directed by our industry advisory board. So those are growers. There are some farm worker groups represented within our industry advisory board. They help us set our priorities. And on the farmhand side, I spend as much time boots in the ground with growers as possible. And ultimately, we've got the relationships to both understand upfront before we invest, if there's an appetite for something. And then once we do invest, make introductions when things are ready to actual paying customers, and doing so at hopefully, and this is an art, not a science, and it's imperfect and it's different every time, but to kind of build at the right speed. And that's where, including folks who actually do the work, we do some kind of grant related work as well to try to include farm workers more. And we'll be testing a bunch of different models for many, many years to come. But the goal ultimately is to ensure that we are operating, our metric is acres impacted, and our metric is farm workers employed by tech startups, and our metric is farm operations impacted. Like, those are ultimately the things we care about.
So with your advisory board, with your industry advisory board, is that what you're looking, is that how you try to organize the conversation? Because advisory board meetings can go a lot of different ways. You have to have a way to kind of say, here's what we're trying to accomplish and here's what we're asking from the advisory board, because otherwise they're going to give you advice. So is that what your acres impacted, jobs impact, you said, could you repeat that again? You said acres impacted.
Yeah, well, these are more, and it is a complicated thing, right? But like at the end of the day, Farmhand Ventures, and also to be clear, there's also the investment side of this, which I view as right to operate. If you don't drive returns in a certain time frame, you can't invest. That's how it works. And I'm competitive, so
that's table stakes. That's table stakes.
So like that's implied. And from a impact kind of side of the world, I ultimately care that the companies we invest in are adopted on a meaningful number of acres, which is different in the context of specialty crops than it is in row crops. And we will do row crop investment. I'll circle that in a sec. And obviously livestock gets weird too in there. Ultimately, number of farm operations that are actually using this product and benefiting from it. And then I view this all as a pathway. By the time I get to fund 2, 3, 4, I would like to be investing in more and more farm worker founded companies. And that starts with farm worker apprenticeships and farm worker consulting to technology companies. And I believe that will de-risk technology companies and create a pathway for, again, farm worker inclusive innovation and farmer inclusive innovation, because I think that's actually what's going to drive alpha in agtech.
So you're talking about the metrics that matter to investors are the table stakes, but then the engagement with the farm workers and with the actual farmers and this industry advisory group to make sure you're solving problems that are helping you have impact on more acres, more jobs, and eventually on more crops, that you're starting in specialty, but that you do some stuff in row and in livestock.
And it's all necessarily very case specific. It's like within our portfolio right now, we've got strawberries, wine grapes, hemp, that's a row crop, and pork. And And we also look at companies that one of the major bottlenecks to ag tech adoption and scale over the past decade of investment in this space has been operational integration. So many of these more sustainable, more efficient, more data solutions have been dependent upon additional labor inputs in a world where there's not enough existing labor. And that has completely inhibited scale. And so this is what hemp is a novel crop. Novel crops are hard to scale, but hemp you can cultivate with your combine. So you can genuinely rotate it in with your corn and soy in almost any region of corn soy production. And you've actually got a real scalable row crop there because those genetics enable you to slight header adjustment, same equipment. My family in Iowa can grow hemp. Boom. You've still got all the supply chain risk stuff, but like that's how we're thinking about it. We're thinking about, are you effectively eliminating the barrier that is labor in designing your technology product? Yes.
So how do you, and I really appreciate the time you're giving me and everything. So let's wrap up with a little bit of like, so how do you know that you're, all of the things that you're talking about are long-term goals. They're trailing indicator. Like you won't know that you're successful. How do you know that you're putting the effort in the right space, your effort in the right areas right now? How do you make sure that you can maintain the momentum that you've got? What do you look for to measure your own,
It's really hard because you also have a lot of fake indicators. This is what Sarah and I just wrote about in that article. For me, I focus a lot on the like individual operations of individual startups, and I do it over time because any given point in any one day and on the entrepreneurial roller coaster, I think any self-aware founder type feels like they're completely failing. And I am not exempt from that, but I try to I've tried to focus on, number one, building a really strong foundation operationally for Farmhand because capital market cycles are not something I have much control over. Fundraising as an emerging female fund manager is never easy, actually. And I know that, and I know what I'm signing up for. And I know that Fund 2 won't really be easier than Fund 1, absent some sort of miraculously early return on Fund 1. And so I've really focused on developing our relationship with the UC system and some other kind of consulting clients such that my team and I can pay our bills, right? And then operating from a relatively stable foundation, we're not paying for much, but we're paying the bills at least. And
so you're not waiting on carry to make everybody whole.
Yeah. Well, and I'm not relying too much on management fees either, which is really helpful and gives me the flexibility. And then I really, like, for me, it's working with founders, it's working with farmers. Like those are the groups that matter. And if I can get founders to be getting revenues, that's good. If they're doing so in a way that is going to ultimately enable them to be profitable, that's better.
Do you ever see those founders being able to do a pivot with the insights that working with you, like, or a pivot, or are the insights helping them get to product market fit faster?
Say in some ways yes, and in some ways no. So like for some companies, yes, no doubt. One of our companies, Scout, is kind of going gangbuster. They're doing great, this AI for vineyard management. And they're even thinking about, okay, how do we actually incentivize everyone who in the vineyard operation and the vineyard management company, how do we actually shift how people are compensated such that when we do some displacement of folks, we do so in a way that works for those folks and they want it, right? And so that's one company that is doing phenomenally well. At the same time, I, a year ago, would have said, I really care that deep tech companies get a lot of federal grants. You can imagine that's caused some difficulties this year. So it's startups, right? You're like rolling with the punches and you're staying alive. And if everyone's alive and you've got enough kind of hope in the tank in each company, you can do a lot with that, actually.
You've established a base so that you can get in and do this on a regular basis, that you're not waiting for big wins, but you are also then keeping your eye on we want to have big wins because you want to have big impact. So you're trying to manage it both ways.
Yeah, exactly. And I do think actually something I am generally not great at is celebrating wins. But for example, we just helped UCNR win the biggest grant in UCNR's history from the the governor's office of business and economic development in California, and we've got a portion of that. So we are definitely seeing wins, but ultimately all of this is a very long-term and very relationship driven. And so it's difficult to, and in the example you were using in like expediting kind of the sales cycle for a corporate client, it's similar, right? And it's one of those things where as I and my team continue to build up all of our relationships, can we set the dominoes such that fund 2, fund 3, it's a little bit easier to raise because we have maintained and nurtured those relationships. But you really got you've got some really delayed outcomes here, which is tough.
Yeah. Well, let's close with this. So you're doing some great stuff. It's really inspiring. I really always enjoy talking to you, but the audience for this is other ecosystem building, other people building movements. So those are people that are doing things in ag, around the crops themselves, and that's really leading, especially, like if, permacrops, like that stuff that hasn't even been planted yet, but there's the equipment people, the input people, the distributors, there's the retailers and the product people, and that's just in the food and ag space. And then you've got all kinds of people that want to do right. So tell me a little bit about how other innovation ecosystem people can engage with you. Like when does it make sense to say, hey, I want to support what Connie is doing with Farmhand? I mean, I'm assuming that you'll still take investors and you'll still, for deals, but what else, what are other ways to engage in what you're doing for somebody that's in an adjacent space?
One of the things, I strict open door policy for founders. I'll always make time for founders. And I check my LinkedIn, just write me a quick note of why you want to connect, and I will make time. One of the things I am most interested in is appropriately structuring finance to resource solutions, right? And I'm obviously focused on solutions in ag, and I plan to be for decades to come. And there's so much that we can learn kind of intra-industry as relates to appropriately structuring finance. Like you can overcomplicate financial engineering, I think. But again, it's just about aligning shareholder expectations. And I'm part of a couple of different kind of innovative financing communities that are not sectoral specific. And there are things that work really well and have only been done outside of agtech. And I'm trying to collect, particularly on the redeemable equity thread right now, because it's hard to do many things at one time. So wherever there are folks who are investing via redeemable equity and have wins that they can point to and share, that's really helpful. I'm big on sharing as much as possible about how I structure things and what works and what doesn't work. And then, I've talked to friends in construction tech, manufacturing, there are other industries that are similar to this. And ag is particularly tricky because you need to have farm access for the most part if you're innovating in ag tech. And most people do not have farm access. So how do you navigate that? And for me, every company I've invested in has a major farm co-investor. So that helps, I think, reduce market risk. And also ensure that they've got a sandbox with someone who's at least going to lose some money if they get frustrated with them.
Yeah, you want to be in the sandbox with somebody that has skin. You don't want to be in the sandbox with somebody that can take it or leave it.
Yeah, exactly. And so I've talked to comp models for how do you enable more engagement between the sandbox owner and the innovator in other industries, and that's always really interesting. So yeah, I think that's kind of my main way of trying to connect with other ecosystem builders.
Awesome.
Sharing lessons.
Well, and hopefully some of them will see this and understand some of these ideas, and they'll dive into redeemable equity and see how that relates to them, and they'll dive into some of these ideas. I really appreciate the time. I really admire what you're doing. I see what you're doing. The issues of labor participation in technology innovation are not going away. That's going to become a more mainstream thing in so many ways. I think you're laying the groundwork for something that everybody is going to be facing soon. I'll go ahead and in the notes for this. So this will be in the newsletter. We'll do a summary of it, for the people that, or the short attention span people. And then we'll put the whole interview out there on YouTube, and in the show notes, I'll include the links to the couple things that you've talked about. So thanks so much for everything that you're doing. Thanks so much for spending the time and helping all of these innovators out there understand a great perspective on how to stay sane and do great work.
Right back at you. Thanks for having me.